TILA-RESPA Integrated Disclosures coming August 1st, 2015. The regulations that impact mortgage lending continue to be revised on a regular basis, and this year is no exception. In fact, some of the biggest changes in recent history will be effective for mortgage applications taken on or after August 1st, 2015. The CFPB has published revisions to TILA and RESPA that are being affectionately referred to as TRID, TILA-RESPA Integrated Disclosures. There are lots of changes, but the biggest one is that the GFE, HUD-1, and TIL forms, with just a few exceptions, will no longer be used. Instead, the new loan estimate, or LE, will replace the GFE and initial TIL, while the new closing disclosure, or CD, will replace the HUD-1 and final TIL. Let's take a look at a sample LE and CD from here. Page 1 begins with general loan information and then includes sections for loan terms, projected payments, and costs at closing. It's important to note that the borrower will now be provided the estimated cash-to-close amount, which is not included on the current GFE. Page 2 is a breakdown of loan costs, other costs, and a summary entitled Calculating Cash to Close. What's different on this page is how the costs are broken down. The 800, 900, etc. series of fees no longer exist. Loan costs include origination charges, services you cannot shop for, services you can shop for. Other costs include taxes, prepaids, initial escrow payment, and other. Calculating cash to close includes a summary of all the charges and credits. Another important difference to point out on this page is that services you cannot shop for will now be subject to zero tolerance, where in the past, these charges fell into the 10% tolerance category. On the third page, you'll find the loan officer's contact and license information, followed by a cost comparison of 5 years total cost, the APR, and total interest percentage, or TIP. The total interest percentage is entirely new and discloses the total amount of interest that the borrower will pay over the loan term, expressed as a percentage of the loan amount. Let me give you an example. Let's say that the borrower's loan amount is $100,000, and they'll pay $50,000 in interest over the life of the loan. Then the total interest percentage would be 50%. Basically, take the interest paid on the loan and divide it by the loan amount to find TIP. You'll also find other loan considerations that you are familiar with on page 3, like assumptions, late payment, and servicing. The closing disclosure is a 5-page form, and it lists the loan terms, payments, and a summary of the closing costs on the first page. On the second page, the closing costs are broken out in detail and identify who, and when, if paid before closing, is paying for the charges. The third page calculates the cash to close and provides a summary of the transaction that looks similar to the first page of the current HUD-1. The fourth page discloses loan features, such as assumptions, late payments, and escrow account information. If applicable, there will be details that describe the terms for an adjustable rate or adjustable payment mortgage. On the last page, you'll find loan calculations similar to the current TIL, including the new TIP calculation as well as other disclosures, and contact information for the lender, real estate professionals, and settlement agent. In addition to the new forms, there are some other changes to be aware of. First, covered loan types continue to include the close-end consumer credit transactions you're used to. What's new is that the following previously exempt loan types are now covered: construction-only loans, and loans secured by vacant land or by 25 or more acres. If you have any questions about the new loan estimate, contact your partner at Academy Mortgage, and we'll be happy to share with you how Academy plans to handle these changes.